Hey everyone, my name's Andy. Channel's Finding Value. If you're a new subscriber, thanks for subscribing. If you're not new here, leave some comments. You know what to do. Click the thumbs up button, do all that cool stuff for me. Today I'm going to talk about value versus price. And I see a lot of people confuse or conflate, however you want to call it, these two things. They just merge them together and they're like, it's the same thing. It's not the same thing. And I need to make sure that everyone on this channel understands the difference between value and price. All right, so let's jump in here. I think this is one of my more important clips because I always see, oil's going down in price. It doesn't matter. You got to look at value. Value, okay? So value, it's the regard that something is held to deserve the importance, worth, or usefulness of something. And the way that I value things is the utility it brings to society. The utility. And I want to emphasize this. The current price a thing sells for is the current value. But values change given market conditions. So depending on market conditions, depending on demand, the supply, all these different things is going to change the price of that thing, although the value is the same. So price is current value, but it can be undervalued during certain market conditions in comparison to future market conditions, if that makes sense. And then I've got intrinsic value. Intrinsic value is a measure of what an asset is worth. This measure is arrived at by means of objective calculations or complex financial models, rather than using the current trading market price of that asset. And this is where I think people are not doing their work. You're not figuring out what this company could be valued at given certain market conditions. Hopefully this is tying together. If you have something that has great utility and it's at a 100-year low, when the market conditions change and that asset is revalued higher, that changes the entire outlook for a company that sells that commodity or asset. So we need to be looking at value. What I think people are doing is they're using price and they're using price as a validation or verification of value, and that is not what you do. That is incorrect. The amount of money, price is defined as the amount of money given or set as consideration for the sale of a specified thing. So you're right in today's market conditions, but everything is going to change in the future. Price is a reflection of current market conditions. Price can become disconnected from value, and that's what we're doing. We're looking for that disconnection in the ratios. Ratios let us know when they have disconnected and also reflects current market conditions. We are at a commodity low right now, and prices are letting us know that valuations will be revalued in the future. That's what those charts are telling us. It's saying that the market conditions are changing, the ratios are changing, which means the market conditions are changing, and we're seeing it in changing prices as well because prices are going higher. So we've got this confluence of all of these things telling us that something is changing, that the market conditions are going to become more favorable for our assets, and that the value is going to be realized differently because the market conditions are going to be changing and be different in the future. So eventually market conditions will change and everything will get repriced to the new market conditions. This is where I have the revaluation of assets. And this is where people, I think, they're getting it wrong here. This is where people who don't have experience will get slaughtered. And I'm here to help you guys and make sure you understand how not to get slaughtered. Market conditions are changing and a repricing of assets will happen. I'm going to say that one more time. Market conditions are changing and a repricing of assets will happen. Real estate, residential real estate, will go higher over time because of the 4 million home deficit. That is where inflation is going to come. That's where the dollar is going to go down. And we're seeing that in our ratio updates. We're seeing that when I give you all of this justification and all of these things as supporting evidence to prices going higher in commodities. And eventually this is going to impact stocks and bonds and other assets. Interest rates are going to want to go higher. If they are successful at holding interest rates down, what that does is it gives you a larger and larger negative real yield. That's going to be absolute rocket fuel for commodities and also for gold, silver, and all the precious metals. This is going to reprice assets of bonds and stocks lower, this new market conditions. And inflation is going to push commodity prices far higher. So I've got the Federal Reserve. I'm going to talk about that just for a second. If the Federal Reserve is successful at holding rates down, it's going to lead to a large real negative rate. Commodities will literally go vertical and reprice themselves against stocks, and inflation will run rampant if they do this. You're going to see an absolute rocket ship launch for commodities and precious metals. It's going to look nothing like, it's going to make Tesla look like it's nothing. Some of the mining companies, that is. It's just going to go vertical. It's going to shoot up higher. Everything's going to get repriced, and ratios will come back into alignment. They're at 100-year lows, and those ratios are going to reprice themselves, and they're going to reprice assets against other assets. That's what a ratio is. So all these things are going to get repriced against each other. Even if stocks go higher, it just means that gold's going to go that much higher. It's going to get repriced. Money is going to rotate out and move into those undervalued assets. Stocks may hold steady, but everything else will increase in purchasing power against stocks. They are going to be losers in terms of purchasing power gains. The next one I call is the informed investor. Since you are part of this channel, you're learning a lot about how to take advantage of this repricing. And this is absolutely critical to your development. You need to focus on value, not price. You need to throw price out the frickin' window and start looking and valuing everything. You got to look for value. Value, 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 value. If I'm not going to buy a Hyundai for $40,000, that's overpriced. But I'll buy a Ferrari for $40,000 because it's of good value and I can resell it at a much higher price given certain market conditions, or maybe certain conditions that the seller is undergoing at that time. You need to focus on value, not price. If you pile into the undervalued assets, the price will eventually get revalued. Don't be chasing price, chase the value. Sometimes the revaluation process takes time, and sometimes it revalues absolutely immediately. The speed is not important. The timing isn't important per se in terms of waiting in this undervalued asset. If you have to wait a month or two, no big deal. The thing you must know is it will happen at some point. It's a question of when it will happen. It's not a question if it's going to happen. It's going to be when. When is this going to happen? I don't know the exact time, but the revaluation will come if you're buying all of the undervalued assets. So be patient, relax, do not chase price. And price is not a justification of value. Separate those things. Oil at $40 is far undervalued. The price, or I should say, it's underpriced. Its value is far higher than $40, and it will get repriced much higher under different market conditions. So for everyone, if you are chasing price, then you don't understand value. You don't know what's going on, and you need to start listening to a lot more of my videos and figuring out how to value things, using ratios, using market conditions, all of those things, and tying it together. It seems like a lot of people on this channel are getting very interested in assets when the prices rise. You have to disconnect yourself from that. If you want to be an excellent investor, if you want to be top of the top, if you want to be picking bottoms, you got to be focusing on the stuff that's down, not the stuff that's just because it's moving takes all of your attention. It also seems like people like to comment when prices don't move or they are underperforming another asset. You got to be patient. You got to pile into the undervalued, and you got to know what you have, and you got to know what the valuations are. Silver is ridiculously underpriced. That could be one of the best commodities in this next bull run. Pick up your silver companies and hold on to them. And if they haven't gone yet, relax. Keep buying them. That's what I'm doing. I will respond to everyone that you don't understand value if you're chasing prices. Not everything's going to move the same, and they're not all going to move at the same time. This is why we spread out our investments among a lot of different sectors and a lot of different investments that are spread out in terms of different companies to capture the value and to capture whatever that value is realized during these moves. So the conclusion here is you don't you need to understand value, and you need to stop worrying or chasing about price. The prices will come if you're in the undervalued assets. And the ones that are the most undervalued are the ones that you have to really hold on to. And you got to understand the value, because if you know which ones are the most undervalued, if you know which ones could really kill it in the end, what you do is you end up continuing to pile into them irrespective of what the price is doing. And if you're really confident in market conditions and you know that the tailwind's behind us, it's just a matter of when. It's not a matter of if, it's a matter of when this stuff happens. It's going to be realized at some point in the future. Wealth and gains will come when value is realized. Value doesn't all get realized overnight. It takes time, and it's going to take patience. And it sometimes it may happen just boom, all of a sudden. One day it's game over. It went up 1,000% in a day. And I'm not joking. You might see 1,000% update on a huge discovery or 500% update. But before, maybe that you were down 20%. Oh man, this thing's going bad. And then boom, 500%. It's like, holy crap. So I'm going to repeat, value, value, value. I don't have price in there. Price is just an indication of movement. That's saying, yes, it's moving in the right direction, or no, it's not. Value is what is going to get repriced in the future. The greater the valuation to the downside, if this makes sense, the more undervalued something is, the greater the revaluation will be in the future. It doesn't mean that the short term that you need to be chasing the thing that's going up 10% or 20%. You need to focus on value, and you need to say, this is the best value, I'm going here. This is the next best value, I'm going here. Ooh, this one's pulled back, I want to go into that one. You should be looking at everything that's going down 5% or 6% or 10%. You shouldn't be looking at the stuff going up, because that's becoming less, its valuation is becoming realized versus the other ones that are gaining valuation. And I look at the stuff that's down, and it seems like I'm buying before these big moves, and I am. I'm very good at technical analysis. I'm very good at valuing things. That is what makes me better than everyone else. That's what makes me different and unique. It's because I'm the one piling into this stuff when it's extremely cheap. SM Energy at $1.50, I was piling in. Now, off the little pullback, I had a teeny bit, but I'm not piling in like I was. Now I'm looking at, Discovery Metals on that pullback at, I think it was like $1.19 or $1.18. It was like, it got down there. I'm like, boom, just buying the hell. It's like, come on, baby. Let's get this thing going. So I'm piling in when everyone else is not looking at it. I'm looking at, support levels going across, saying, pick it off at this support level, pick it off at this support level. And I cost average in. Focus on value. Take price and throw it away. That's my suggestion. If you like this content, subscribe, click the thumbs up button, and hopefully you're having a nice day. This is Finding Value.